Here then is an uptrend. It has a succession of higher lows and a succession of higher highs. The definition, the technical definition is basically that the market stays above a diagonal drawn between the lows. You'll see the market came down and tested the support, as we call it, from this diagonal, the trend line support, and bounced off it. The trend remains intact even though there was a very brief moment when it traded beneath that support. Clearly, the problem for the trader is to think this reinforcement of the trend that's defined by those 2 points, is this the beginning of a new trend? Should we be buying here? So that's, in that sense, the diagonal helps with trade discovery. It also helps with risk control, because if you did buy here, it's only if this trend were broken would you cut the position. So that's the way in which you can help to discover an opportunity, i.e. a trend is intact, and control the risk by both buying here and cutting your position if this blue line is broken on a closing basis. The whole debate about self-fulfilling prophecies and charts is a very standard argument, but it has some flaws in it. And that surrounds the fact that, yes, a lot of people are looking at this and a lot of people might buy this, and therefore it's self-fulfilling in that sense. But it misses the point that not everyone looks at the same chart of the US Treasury 10-year future. Some people, this is a weekly chart, but some people are looking at the day chart, which gives an entirely different picture and therefore suggests entirely different trades. Some people are looking at the day chart, which gives another, the monthly chart, which gives another picture again. If you realize that basically there are thousands of traders, each with a differing trade horizon, each with different amounts of money to spend and to risk, you realize that at any one time there's a whole host of different anticipations about a market that makes a market. And that's why there may be an element of people buying here and driving the market on, but if you take the broader view of what's going involved in the participants in the market, you'll realize that in fact there are so many different buyers and sellers at every level for good reasons. Remember, not every trader is a technician. Some are fundamentalists and some are people simply trading sentiment. They will be entering and leaving the market all at different times. In that sense, technicians alone cannot run a market.